Welcome back, folks. You've asked me to give you some insight into the two trades that I did yesterday. Okay, these two, right? This one was a long, the one on the right, and this one was a short, all yesterday. So I'm just going to very quickly walk you through those two trades. Okay, from my perspective, they are pretty straightforward. Okay, so let's first talk about the long that I did in the London session. Okay, so in London at that point in time, where is London? We're talking about this long here, right? Where we went from there to the high of that current day. Okay, that's what I want to talk to you about. So at that point in time, London has taken the low of Asia. Okay, so London has taken liquidity. Okay, and therefore when we are down here, we are at the low of the day. Okay, and at that point in time, we are also below Monday's low, right? So that means we're at the low of the week. So Monday traded, made a low and a high. Tuesday went below Monday's low. And so therefore, we are at the low of the week. That's important. Your high probability trades are going to come at the low of the day, or at the high of the day, or at the low of the week, or high of the week. Okay. So if we're at the low of the current day and at the low of the week, I'm going to look for a long setup. That doesn't mean I automatically take a long. It means I need to find my setup. I'm looking for a long. I'm expecting a reversal, right? Because the reversals often come when some of these significant lows get taken out. Okay. Let's talk about that entry. Now, when I've entered down here on the 1 minute. Okay, you're looking at a 5-minute chart. I wanted to give you the easy setup, right? The easy setup. Okay, so here we have a swing low. Okay, here we have a swing high. Now here we have a lower low. Okay, very important to identify that pattern, right? That market structure. Then you see we have a higher high. Okay, that is above the previous swing high. Why is that previous swing high important? This one here. It's important because it created the most recent low. The lowest low in the chart was created by that swing high. So when we move above, like here, okay, then that's a change in market structure. Okay, and so we're looking for some kind of an entry to continue that move up. Okay, we can see that we have these equal highs. Okay, that the market may be drawn to. That is not just any equal highs, that is also the high of the current day, right? You can see the market traded above the high of the current day. So that's everything we need to see. We need to see and identify what could the market be drawn to when we're down at the bottom thinking about taking a long. Okay, so lots of things to think about. You're at the low of the current day, right? Asia is the low of the current day before, right? London opens. That's the current low of the day. So when London takes out that low of Asia, okay, on the left here, that means London has now created a new low for the day. Okay, wouldn't you want to be a buyer at the low of the day or at the low of the week? Absolutely, you want to be a buyer at the low of the day or the low of the week, right? Because that is discount pricing, right? But you need to make sure you have a setup because the market could continue to go down. So when the low is broken here, we could continue going down. So you're looking for your setup. Very important. You need to have a setup. You can't just jump and go long just because you're at the low of the day or the low of the week. You want to see that reversal, right? I'm expecting a reversal, but I don't just jump in. I look for my setups. And then you need some kind of reason to long. And the reason to long at that point in time, you have these equal highs. Why do I call them equal highs? Because it's a low resistance liquidity, okay? Where these guys here who have shorted on the way down have not been stopped out, right? These folks here who've shorted that have not been stopped out, right? Typically, when a market makes a high like this, then typically what will occur prior to a move down, London should have stopped hunt Asia and then gone down, okay? But we don't see that. And so therefore, higher probability at some point want to come back up there, okay? And so when you have a low, like London's high is lower than Asia's high, okay, then we refer to that as low resistance, okay? So that's our reasoning for why we want to consider a long, okay, in addition to having the setup, okay? So we can see there is a draw on liquidity, a potential draw on liquidity. Once that long has been confirmed, how is that long confirmed? Well, I've walked you through that breaking structure, okay? We have a high, a low, and then a high breaking structure. So what's the entry? The entry is going to be at the bullish breaker. Okay, let me make this chart bigger so that I can highlight the bullish breaker. Your bullish breaker is going to be the last up candle in the swing high in which market structure has broke. So where is that? What did I say? I said this swing high created this swing low. Okay, so once we're above there, we've closed above there, there's a break in market structure. Okay, the last up candle in that swing high is this green candle right there. If you move that across, once we trade above there, as we can see we've done right there, okay, any push down into that zone is a potential entry for long, okay, targeting the equal highs that I've shown above, Okay, these equal highs. High of the day is what I would target. Okay, and you can see we've got high of the day, right? We can see that the market has moved up into, let me grab the arrow, okay, these highs of the day. And you can see that is very clean equal highs where you would expect to have buy stops above those levels where traders have shorted into that move down. If they haven't taken profits, then this move up has taken those buy stops. Okay, so let's talk a little about time. Here at this point, okay, time is at the new hour. Okay, so look at time down the bottom. It's 10 past 5 a.m. That's a brand new hour. I like to see setups form at a new hour and within that first 30 minutes. Okay, if it's the first 15 minutes, then that's fine. Now, something I want to mention here is that your high probability setups are going to occur inside of a session like Asia or London or New York. Okay, that doesn't mean the market won't move outside of a session like here. I refer to that as a gap time. Here, the market has moved in the gap time. Often a move outside of a session like here is a false move. And you can see we had it move down after that. That doesn't mean we can't trade the false move. So long as we have a valid setup and a reasonable trade idea. For example, in this case, we have the low of the day. We have the low of the week. Okay. We have the break in market structure, a bullish breaker that's very clear, right? This push down is in the new hour. And we have very clear equal highs that we can target, which are at the high of the current day. Okay, so in that scenario, there's nothing wrong with taking a long at the bullish breaker. Okay, doesn't matter that it's not inside of a session. However, you got to be nimble. You got to take your profits. Okay, at key levels. Had you not have taken profits at those key levels, then you can see the market completely retraced and went below anyone that may have been long from here. Okay, so you got to be nimble. You got to have a trade plan, and you got to follow that trade plan. Okay, now let's talk about the short that I did. So at this point in time, okay, where am I? Right, this was the short trade that I did. I'm at the high of the day. Okay, that's perfect place to look for a short setup. Doesn't mean I immediately go short, but if I find a setup, right, then I'm good to go. Okay, so that was my second trade that you also wanted to know more about. And if you look at my YouTube channel, that is this one, right? The short trade that I did. Now, time's important in that trade. Okay, so if I go back to the chart, at that point in time, we're coming to the 8:30 open, and we've taken all this liquidity. When we take a swing high or a swing low, that is referred to as external liquidity. And I've marked that out on the chart, okay, in the video. I've said this is external liquidity, and I'm looking for the market to come back down as a pullback into some level of internal liquidity, which is simply a fair value gap. So you would have seen on the video that I took a short. I think I was showing you a 1 minute chart. Okay, so we are here. This is the long that I took. Okay, now at that point in time, we've taken all these highs, right? We've taken, that's the high of the day. We've taken all that liquidity, external liquidity. Okay, and then I recognized on a 1 minute time frame some weakness. Okay, so this here is coming to the open of 8:30. I'll take a short and I'll show you on the video on a 1 minute chart, and I'll talk about the setup in a moment. All I'm targeting is internal liquidity. Okay, and you see that on market in the video, and that movement is enough. Okay, from where I got into, that is about 70-80 pips. That was a 13 lot, so that movement was enough. I didn't have to take all this. I wasn't expecting all this big movement down. Okay, now I entered on a 1 minute chart, but let me show you this on a 5 minute because it's going to be too difficult for you to understand 1 minute. 5 minutes, nice and clean. What do we have here? 2 down candles, right, or 3 down candles. That is our bearish breaker. We move higher. Okay, then we move down, engulf that entire structure. Okay, I get in somewhere here. I think I got in and I had a bit of drawdown, and that's okay. Okay, the next candle, the 8:30 a.m. candle opens, moves up into this up candle, our bearish order block, and these 3 down candles, our bearish breaker. Okay, so very nice, clean, easy entry on a 5 minute chart. Okay, as I said, I was simply looking for entry, exit back to the fair value gap identified on the 15 minute chart. Okay, so that was, as I've explained, this fair value gap right there. That's all I was looking for on that, and that was about 70 or 80 pips from my entry on a 13 lot. That's enough. Okay, so there are the 2 trades that I've walked you through. Okay, I've shown you how you could have entered on the bullish breaker. Okay, my entry, so you could have easily entered, anybody could have easily entered on the bullish breaker. Okay, I entered somewhere down here on 1 minute. Okay, and I exited at the highs, somewhere at these highs. I don't recall exactly. I think at the high of London from memory. Okay, then as I said, we're at the daily highs. We are approaching 8:30 on a 1 minute chart. I can see this, what you're seeing here on a 5 minute chart, that bullish signature, and I've taken my short, and that short is only somewhere down to here, right? 75, 80 pips on a 13 lot was enough, okay? I wasn't anticipating this big move down, but that's fine. I'm out, nimble, taking my profits, close my computer, going to play, okay? So I hope the video is useful. The execution, as you've seen, is on YouTube, right? They're the two executions that I've now walked you through, that you've asked me to walk you through, what the setup was for the long, what the setup was for the short. Okay, hope it's helpful. I will now talk with you in a future video.